Good morning, everyone. Very welcome to Monday's market preview for the week ahead, dating the week of the 4th of April. So obviously, quick recap from last Friday. We had the NFP data, something that we spoke quite a lot about in our recap on Friday. We had a fairly strong overall, a fairly strong jobs number with the US labor market still providing increases. Okay, now a couple of the big caveats that I was looking at was even if we go back to last week very quickly, we had the labor hours, the average hourly hours, we had the employment figure, and we had the labor market participation rate and unemployment rate. So broadly speaking, if we just take a quick recap, we can see very quickly that the wage inflation is continuing to play in, which is quite positive, which means then that yes, although prices of goods and services are more expensive, we're seeing that reciprocate back into the wage market as well. Now, I suppose on the face value, yes, the payrolls number is about 60K or just slightly underneath 60K under this month's expectation, but we also have to factor in that there was a revision last month of 90K. So overall, between the revision and between the payrolls number for last Friday, we ended up with about 520K in terms of jobs being created. So overall, a fairly solid data piece. So you'd be deduced to say, well, surely with the stronger data number, the indices should have performed slightly better. And broadly speaking, yes, you would be correct to assume that. Now, we did obviously get a little bit of a selling off again on Friday before a little bit of a stabilization into the close. However, the reason where a lot of the selling momentum came through is in the back of the inversion in the yield curve. So normally speaking, we have our 10-year yields. We also have our 2-year yields. Now, an inversion in the yield curve means where the 2-year yield goes above and has a higher quoted value than the 10-year yield. So you can see here quickly, the 10-year yield 2.39%, the 2-year yield 2.45. So we can see an inversion in the yield curve. Now, largely speaking, why is an inversion in the yield curve so important? Well, statistically speaking, when the 2-year crosses over the 10-year, meaning that there's an inversion in the yield curve, there is a strong likelihood of a recession, statistically speaking, over the next kind of 12 to 18 months. I think if you classify it over the 12 months over the last 100 years or so, I think you're talking about an 85% likelihood. And if you even go to the next 18 months, you're talking even more, kind of 85 to 90%. So what that's basically saying is that there's a likelihood of a slowdown. There's a likelihood of a recession coming. Now, obviously not yet, but in the next 12 to 18 months, this is something that we should be paying very close attention to. So you'll see goods and services going higher. Even last week, something that we alluded to on Friday as well. Overnight on the 1st of April, what happened in the UK? Energy bills, energy rate caps were removed, and energy prices shot up by 53%. This morning, we're reading out of Germany the inflation story regarding food, with German retailers now increasing the cost and price of food in supermarkets by 20 to 50%. So even on average, you're talking 20% extra in food, you're talking another 30 to 50% extra in energy bills. So that's very much going to affect the households, normal households with normal people. That's definitely going to affect it. And then when you back this up with inversion in the yield curves, it's only going to mean one thing: massive slowdown is going to come, and we're probably going to see a recession of sorts, whether it's an extended recession or whether it's a shorter run recession. Let's wait and see. Okay, so it is statistically important. It's important to know the fundamentals. So that's a very important recap. Last week, I suppose, the jobs data with some of these other important economic indicators coming out of, as I said, UK and Germany, and also the yield curve as well. Now, if we look to the week ahead, okay, let's look to the week ahead. Yes, we've Governor Bailey about to speak this morning. Okay, so it'll be all eyes from the BOE perspective to see kind of what comes of it. Now, again, we also have BOE Cunliffe speaking later this afternoon. Now, Cunliffe was the only BOE member who decided not to raise rates at the most recent Bank of England interest rate decision. So he was kind of the defector in a lot of ways who decided not to increase rates. So again, paying very close attention. Will he want to increase rates next time around? Well, let's wait and see. Okay. Beyond that, then we have a little bit of data out in both Canada and through the Asia session tonight, which is obviously worth keeping an eye of. Now, again, do I trade Asia session personally? not particularly, but it's important to, I suppose, have a grasp of some of the fundamentals. Overnight tonight, 4:30 a.m., we have the RBA interest rate decision. So that will follow with the statement. Again, will the RBA raise rates? If there is a surprise on the cards, now at the moment, they're not expecting to raise rates. If there is a surprise on the cards, then we should see a stronger Aussie. We should see a stronger Aussie, and we should see the markets then churn higher in favor of a stronger odd. No, so let's obviously wait and see. At the moment, there's no clear statistical evidence that they will increase rates, but of course we will be watching the statement as well for I suppose a broader broader definition of where the RBA currently sees the markets as well. Okay. Tomorrow morning we have a raft of data out in the London session. Okay, so we have Spain, Italy, Germany, and Eurozone data all coming out, more broadly speaking. So it'll be worth keeping an eye on that. So that'll probably lead to volatility realistically from the futures kind of 6:30, 7 a.m. into the latter part of the day as well. So into the US trading session. Now, again, tomorrow we have a number of Fed speakers. So we've Kashkari, we've got Lil Brainerd speaking as well. We also have some additional ISM data from the previous ISM data on Friday. And we also rounding off the day with Brainerd speaking again and Williams also speaking. So tomorrow will be the start of it. There's quite a lot of speakers speaking, and then obviously Wednesday repeating that up. De Gunduz, Panetta, and Lane also speaking in the Euro session as well. Lane and De Gunduz being part of the the more influential members. Also, Panetta has a nice pull within the ECB as well. So we're keeping an eye on that one. Next on our list then, as we kind of progress to Wednesday evening, is our FOMC minutes. So our minutes from the FOMC previous meeting. So it'll be worth keeping an eye on that. I know obviously we had our 25% rate increase by the Fed last time around. We're now looking for potentially multitude of 50% or 50 basis point rate increases. So that's 0.5%. Let's see if that happens, because at the moment we are forecasting the probability is in favor of a 0.5 rate hike in May, with the potential for another one to happen during the summer. Not necessarily June, but potentially July. So that brings us to Thursday then. Again, Thursday we have Evans, Williams, Bostic, and Bullard all speaking on Wednesday throughout the day, or Thursday throughout the day. So it's important to keep an eye on that. Bullard, as we know, fairly hawkish. Bostic, fairly solid sentiment from Bostic last week as well. So of course, let's see what some of these, because these guys will give us clues as to kind of where they see kind of the May rate decision going. Now, of course, some of these will probably mention the 0.5 hike, but that which obviously prices in the more or the increased likelihood of that 0.5 percent hike. Now, of course, Thursday we do have data in the morning as well. Throughout in Europe, we've got retail sales in Europe, we've got monetary policy accounts in ECB, and we've got the BOE's economic advisor PIL speaking as well. So again, Thursday busy day. On Friday to round out the week, not too much on Friday, mostly Canadian data with Panetta speaking again in the ECB. We've got Canadian unemployment rate, participation rate, and hourly average earnings with net change in employment. So again, this week will be a little bit data heavy. It'll probably be more geared towards the fundamentals in terms of speakers, outlooks. I think probably a bit more of a mindset towards that. Of course, we will be looking for more updates regarding Russia-Ukraine. There was a little bit of a breakthrough according to reports over the weekend. Now, the one caveat that I would be saying with a lot of the data or a lot of the information regarding Russia-Ukraine, we're seeing 1 minute something come out, and then an hour later, we're seeing the exact opposite. There is a lot of misinformation coming out, particularly regarding Russia-Ukraine at the moment, and it is important to take some of these pieces with a grain of salt. And that's why I would be saying to make sure that if it's coming from a verified source, it gives you a little bit more validity. And of course, with the Russians and of course the West as well, there is a lot of, I suppose, factually incorrect information being broken out as well. So just be kind of mindful of that as well. All right. Now, again, if we go across to the charts very, very quickly, we've looked at our 2 years and our 10-year yields. We've obviously identified that accordingly. If we look at our indices very, very briefly, again, first and foremost, looking at our Dow Jones, we were in this region last week. We alluded to, we actually broken through very, very clearly on the 31st of March. We saw that sell off into that range. And since then, on Friday, the indices have been trading fairly consolidated. Now, we did get an initial breakthrough lower Friday, but the price action now overnight is fairly stabilized again. Now, will we see another flush move back into this region up here? Well, let's wait and see. Now, I suppose if you're going to take the Dow Jones on face value, you can see how we've got this massive bullish impulse, consolidation, secondary consolidation, false liquidation or mitigation move, order blocks to the downside. Price action's been hammered up to the upside very, very clearly. Now we're seeing range of consolidation. Wouldn't it be ideal to see a little bit of relief rally back into this range for maybe a next wave of unloading and selling? Potentially, let's just wait and see. At the moment, the price action this morning is fairly consolidated at the moment. Okay, we're seeing that fairly prevalently in the indices. Nasdaq, fairly similar scenario. Okay, so this is my region here on the Nasdaq. We had a shorter term region here at 15,000. We had our highs at 15,250. Again, month end, we broke through. We kind of continued moving early Friday morning, Friday afternoon, but we have seen a recovery pre-market this morning, and the indices are trading slightly higher. So again, worth keeping an eye on that into today's session. S&P's similar scenario, wave of selling off into month ends. We saw that crypto's getting hit on Thursday. We saw the indices getting hit. We saw a wave of different selling month end. I suppose the squaring off of investment books and stuff like that, particularly in the UK, but also more broadly in the US as well. We saw heavy selling. We're seeing the price action level out after initial sell-off on Friday, and the price action is now fairly consolidated. So again, paying attention to see, do we finally get a pullback into this 4,600 level? Let's wait and see. Let's wait and see. Let's see how things progress, and then obviously go from there. Okay. Our DXY. So this is something that we did allude to earlier on in the week and last week as well. We got that massive bounce on Friday. The DXY has continued to remain consolidated. Nice bounce off the lows, and we are continuing to then go higher. So this is an area we've alluded to for the last number of weeks. You've been watching, if anyone's been watching these videos, has seen that alluded to fairly prominently. The price action has bounced again, giving a little bit of a strength into the DXY while we're in this consolidation range, which again is probably the reason why the indices have sold off so much into month end, because we started to see that U-turn in the dollar strength. So dollar up, indices down. Dollar is currently rising at the moment, which has meant that the indices, as a result, has seen a little bit of sell-off in those last 3 or 4 trading days in particular. Okay, so that's the DXY. Very, very quickly now, if we run off our asset classes, just a few things here I'm looking at. I suppose statistically speaking and structurally speaking, oil has continued to make lower lows. We had the inversion up here at 116. We've broken through. We had the relief rally, sharp sell-off back into these lows. $100 on West Texas oil crude was, I suppose, the nearer benchmark into the weekly close. Price action had broken temporarily. We are trading back above it. Again, I'll be watching the volatility this week to see, do we get a break, maybe another manipulated move back into this 103 handle, or if the price action can ultimately reject here and continue moving lower to this gap close that we've alluded to here at 92.50. So again, it's just broadening your horizons, broadening your scope. Of course, we had, if I just tidy this up ever so quickly, we can see here that this gap close, as I've alluded to, from the beginning of February or end of February, beginning of March, has yet to close. So this could be a key catalyst. But at the moment, price action holding steady between the $98 to $100 mark. And last, of course, if we look at gold, just looking at some short-term structures here in gold, massive consolidation. We had relief rallies to the upside. Gold did sell off to the downside, triggering a lot of buy positions. And now we've pretty much ground sideways into this kind of beginning of this week. And we saw initial spike previously on month end. We did see that rollover slightly again with the slightly stronger dollar to kind of begin the month of April. However, we do know that normally speaking, the Monday after NFP does be quite quiet in comparison to some of the other Mondays. So again, I'm not expecting a massive amount of volatility today, but of course, just having everything on all options presented on the table. Now, broadly speaking, in second to that, there's a few levels up here I was looking at because we had these shorter levels, wave 1, wave 2, wave 3 sell-off. We're now in consolidation mid-range. So again, I'll be looking to see, does gold make a shorter term relief rally back into this 1955, 1960 level? I've got a little notification there. And significantly, again, beyond that, if we're taking out these lows here at 1915, I would probably be looking for a near-term retest of these bottoms around the 1890, 1895 level. So mid-range at the moment, I don't tend to trade mid-ranges because literally as mid-range, it can break either way. So I'm just going to let the price action come to me this week and evaluate setups once they are proved to be valid. Other than that, really not too much else to report. Again, yeah, as always, we have our tweet deck here in the background for the latest news and events, which I have to log into again. But other than that, folks, that is pretty much us for the weekly preview. So we will be back later in the week for a recap of the fundamentals and price action as well. Have a good week, everyone.